Morning, guys. The COT data for today for the week beginning the 12th of August 2024. We normally do it on a Sunday, so Christian's done it for us on a Saturday, which is great. So this is for the data for the upcoming week. Remember, this data is from Tuesday. Now, I have to remind you, so when you come to Discord, you have to come into the COT report, and then you're going to click the download button, okay? And then when you get it in your downloads, right-click, properties, I need to unlock it because Windows has been a bit picky. It's been a bit funny about the security because it's got macros in there. So we've unlocked it, so we can now double click it and open it. So you just need to unlock it. So in case you couldn't open it for any reason, that's the reason for it. And once it loads, and then we're going to come to enable the content, and then we're going to come to the chart page. We're going to come to the net non-coms, and we're going to move that chart to its own tab. So net non-coms, we'll call it comps. Okay, so this is how we're looking at for the week ahead. So the euro is slightly more positive than the dollar. The dollar did tick down slightly. The euro did tick up higher. You may have seen the Euro USD spot, the currency pair. It didn't move at all on Friday, so it probably should go a little bit higher. And also, I think I put something in Discord about the channel in the ascending channel for the Euro USD. Here, this is it on the daily chart. So we are ascending. We could pull back, but we're quite bullish in that channel. So this is that Euro USD on the daily. So you look at that channel, it's quite bullish. So you're probably looking for buys if it falls. Looking for dips in that channel. So that kind of corresponds to what we're seeing on the COT data, and we're seeing more euro strength than the dollar. Okay, so that. It's worth noting, just be careful. We may well dip in order for it to become a buy. But from a COT data perspective, it's okay. All right. So looking for potentially any big drops, you're looking for a good entry on that particular currency pair. Yen. Okay. Yen is obviously massive because they're closing down the shorts very, very strongly, and it looks like we're going to go net positive. Quicker than I ever thought would happen. So we are minus 11,000. We've come off 182,000. So that's yen strength there, right? And we're going to possibly go net positive on Friday when that COT data, when it comes out, when it gets released. So we could well be positive. So it could be like a little bit of a wrecking ball, and it might need to be sedated because if we get too strong in yen, then it's going to impact like that carry trade. And obviously, if the yen, the Bank of Japan, they hike, so it's going to impact their carry trade, and it could be a little bit of a wrecking ball. And also, it's worth mentioning is that this data, this stuff that you can see in front of you, is taken into account what happened on Monday, and we had that Black Monday crash, like in speech marks, with the VIX went like 100%, 150% in a single day. It was just absolutely bonkers. So this is taking into account all that stuff. So this is reflecting what happened on Monday, but it didn't reflect what happened on Wednesday, Thursday, Friday. And on Wednesday, Thursday, Friday, we pumped on risk. So we'll have to wait and see for yen whether or not we're going to go positive. We've certainly broken that resistance as well, and we've definitely got that support. So it could be a wrecking ball, and it might need to be sedated. If we're going to be risk on Monday, then it could get sedated. But we have seen the yen move away from its traditional risk on, risk off relationship with like the S&P, where we could see a strong yen or a weak yen, and the S&P would rally anyway. So it's kind of like it lost its power a little bit over the last several months, but it might be regaining that correlation with risk, especially because the carry trade unwind. Okay, so that's the yen. So that's huge. This is also the first time I've seen this data as well. Okay, So we'll take off Euro and put on Aussie. So there's AJ sell, okay, because they've shorted AJ and they've gone long yen. So that should be a sell, okay. A off, pound on. Pound was struggling up at the highs and we went to 1.3 and we'd fallen since. And I was wondering whether that was just a big stop run to 1.3 on the the cable rate, the pound USD. It's possible. Also, it's worth mentioning that this isn't necessarily the pound USD, but the pound crosses. But of course, because the pound USD is such a commonly traded, heavily weighted pair, it's obviously going to have that relationship with pound USD. But obviously, the euro pound's a big pair as well, and the euro pound's a good one to watch if you're trading the pound sterling. Okay, because if you get a strong euro versus the pound, it can send the pound lower. It's worth noting, actually, if we put the euro back on, maybe we'll take off, well, you can see, like, euro up, pound down. So EG long could be good. See, we're going to potentially get the crossover there, okay? So you could look for EG longs. And I know that we've come down to some support. As you would have seen in Discord, I've published some stuff in Discord. So that's a pound off, euro off, and CAD's been weak. Really dumped. There's CJ sell because they sold CAD and have gone long yen. So look at the the price performance on CAD yen. It's going to be pretty bad probably. I want to talk about the bubbles, but I'll do that after, just so you know what's going on with the bubbles. But so we should see weakness over here. We should see strength here. So we'll have to see how Swiss has performed, see whether or not that pumped on the COT data. Okay, so that's that. So it has sort of knee jerked a little bit, but it's definitely in freefall mode, CAD. Okay, CAD off, and then gold on. And we come to that resistance at 274, 285, and then we're back below 238. So we definitely got below that. We've hit that resistance, possibly taken out a ton of stops in the process. So we'll have to keep an eye on that. Resistance level, good supports, good supports, good support, good support, good support. Okay, but big resistance level there. And it could potentially come back down here maybe. So, we could be a sell up to 2007. Yes, we could see a little decline on contracts for gold. Okay, then it will probably be a buy, to be honest with you. Gold off, and then we'll look at the New Zealand dollar, and it ticked lower. Now let's have a look at the bubble. Yes, that's weak, right? So they've gone long New Zealand dollar, so that should fall, and it's fallen on that. Okay, so that's that. It says NJ sell. Oh no, keep that on, and we'll look at the Swiss franc. Now, according to the bubble, this should have done okay. Yeah, see, they ticked higher. See, the banks have bought it, and the retail have sold it. Right, so this is them selling, this is them buying. Okay, so we should see Swiss strength, yen strength, potentially a bit of CAD strength, USD strength, euro strength, and potentially gold weakness. Actually, that's quite interesting. Hasn't really moved away from its starting position. When the start of the week occurs, all the bubbles are aligned on this axis. So gold hasn't really moved, and also the euro hasn't really moved much either, to be fair. When we look at the weekly average, it's hardly done anything at all. So they're a bit unsure of the euro. A bit of weakness in the pound, weakness in New Zealand dollar, weakness in Aussie. So we've got some risky currency pairs over here, and we've got some safe havens over here. So going by the bubbles, we could be risk off on Monday. Okay, but obviously the indices are probably going to pump regardless, but it can give you a bit of a clue, a bit of a heads up with risk appetite. The yen bubble was down here. We were below 50%, and now we're above 50%. So they're net long, but they've come way off the highs. They were really long, up to about 95%, and the BOJ intervened. and they pushed the price down, and it really screwed the retail guys up. And the yen bubble went like this, and then back, and then it's gravitating up. So it could do that again and do this circular thing. And it's just going to basically liquidate retail positions. And you'll find that whenever you look at the bubbles, they do like this orientation thing. It's basically it's like a wash machine, like in a spin cycle. The retail guys get put in a spin cycle, and then they get laundered. Basically, they get their money taken and extracted, and they come out worse for wear. And the banks make money, and then they lose money, and they get pretty much whitewashed by this price action that you can see. So hopefully it helps, and we'll have to see how we go. I'm leaning towards bearish gold because of the COT data and also that, but ideally you'd want the gold to be up here because it will tell us that they're net long and then adding long. See here they're short but adding long, so we've got like a mixed picture for gold. So ideally that comes up higher. If it does, I'm probably going to look for sells on gold, I think. Likewise, yen comes down, we're going to see yen strength, and it could be like a wrecking ball. So that's how you can use it. If you want to get access to the bubbles, we've got a free 7-day trial, so you can do that if you want to, and then you can see how how to trade it. So, for example, you could look at next week. You can look for Aussie weakness, perhaps yen strength, and then you look at your technical chart and think, well, that's a good place to short AJ, and then you're looking to place orders, and then you're looking to profit doing it that way, because you can enter at market, but you can get a bit chewed up and spat out. If you place orders, then they kind of work out a little bit better, and it's less gambling as well. So potentially yen strength, potentially Swiss strength, potentially pound weakness, Aussie weakness, and New Zealand dollar weakness. So we'll see how we go, and we've got to remember to keep an eye on all that stuff that's going on. But also another thing is that when they have a really scary news event, it's likely a ruse and a bait to get people to sell. And there was a very scary news event that came out on Friday, and what happened to the S&P? We pumped. So if you want to know whether or not a risk event is legit, just come to Discord, check your VIX. If that's spiking higher, then we know it's a risk off event and it's legit. If that's not really moving or even falling, then we know that it's not legit. And that news event, that scary news event, isn't real. And they designed it to scare the retail guys in order to get them to sell. So that's how you can use it. So keep an eye on the VIX. Obviously a big key psychological number at 20. So we'll see whether or not we're going to remain above that or we'll creep below. If we creep below, we'll pump on stocks. Okay? So have a good weekend. I'll speak to you soon.